Ray. What do you want to do tonight?
Same thing we do every night, Pinky. Try to take over the world.
And in this volatile market, should you buy gold as a defense or a hedge against inflation? That's what we're talking about. It seems as though there's a reason to buy when stocks are rising or when they're falling, but gold prices have stayed relatively steady in recent months. So when should you buy gold and when should you sell? George Giro, Senior Vice President at RBC Capital Markets, says gold is a defense against loss of purchasing power. He joins us now with his thoughts on successfully trading gold. And we certainly need them. Thanks for being here.
And thank you for having me. I think it's very important, very interesting to look at gold as a different sort of an asset class than most people have looked at it. Because I remember last year when we had the stock market really pushing down, 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 gold also went down, down, down because, of course, money managers, when they have to raise cash, they sell everything. And people said, gee, how come gold isn't going back up when the stock market is down triple digits?
Some buy it as a defense, some buy it as a hedge against inflation, and those two opinions are contradictory. So how do you know when to buy and when to sell?
Well, they really aren't contradictory.
Okay.
Because the bottom line is maintaining your purchasing power. Back in the Depression days, we always talk about the Depression these days, a kilo of gold bought you a new Ford, Chevy, or Plymouth, and guess what? Today they do the same thing, except the names of the cars are a little bit different.
They certainly are. And we also have Bloomberg's Michael Whitney here with us. He used to trade gold and had a little difficulty with it, right, Michael, over the past year?
Oh, certainly. I mean, last year I was talking to George a little bit before he came on, and it was quite difficult to trade gold, lots of false breakouts. I mean, when should the investor who wants to have allocation to gold, should they try to time the market or should they just close their eyes and buy it?
Well, neither. I think what you need to do is decide how much gold you really want to have in asset allocation in your portfolio to maintain some purchasing power. And the experts all say somewhere around 5%. And then when do you buy that? Well, you buy that each time you have a major sell-off in gold. And that seems to have always worked out. If you look at a long-term chart on gold, you'll find that all the big down moves, the breaks, were really the buying opportunities.
So 5%, is that inclusive of a broader allocation to commodities, or do you think 5% gold is a nice weighting to have in a portfolio?
Oh, I believe in 5% gold because all the other metals all have different purposes. Now, copper has its own purpose, recovery in industrials, shovel-ready stuff, all the TARP money hitting at the end, the infrastructure needs if all the storms hit in the fall. That's copper. On the other hand, copper was hurt by housing starts in the last couple of days, so that sold off. Then you have silver, sort of a companion to gold,